line, right? So support, a 1, 2, 3, price hits resistance in this range, and then it comes out of here, it moves up another, what is it, like 700 plus pips, retraces very quickly about 500 points, and now it's sitting on previous resistance, now acting as support. And we have to see, we have to watch very closely, because if the price breaks the support line and we get setups on the 4 hourly and 1 hourly chart, of course we can trade this range and go for 27 or 90, 80, 90 or 28, okay? But right now, if we check the daily chart, price hit the 200 EMA, it bounced on the 200 EMA. It doesn't mean much because it just dropped 500 points and it had to bounce somewhere. So first it bounced at previous support resistance, and now it bounced on the first touch on the 200. And as we know, the first touch after big move is usually a bounce on the 200 or 633. Okay, so we have a 1, 2, 3, we have another 1, 2, 3, we have 3 touches, and we have a bounce on the 200 EMA. So now this is the important and dangerous area. We don't just jump into any trades here. We want to see the price actually breaking support here. And then if we see a setup below here, then of course 1 hourly, 4 hourly shorts to go to target this area. But now, what about this weekly 1, 2, 3? Of course, on the daily you have to draw the line closer to the price. Right now it's a Heikin-Ashi kind of trend line. Okay, Heikin-Ashi line, we call it just Heikin-Ashi line because it's touching all these candles and sliding on it. So if we get a clean break, then we can decide what to do next. Oh man. Okay, 4 hourly chart. Look at this. There we go. So if that happens, we have, I mean, a clean break here. It means we need a lower point on the chart, and then a lower high, and a lower low, of course. And then we can start watching. Now, if the 4 hourly breaks up, it should break quick. Just a little bit sliding here, ranging doesn't help much. This, and then afterwards, that would be okay, right? Of course, if you go back to the daily chart, you will have some resistance. Important that on the daily that the 36 also breaks. Very, very important. Otherwise, don't touch it. And if that happens, if that breaks, then you have a confirmation also from the weekly chart, because you have a weekly 1, 2, 3. And then, of course, the next target, the target here would be first of all the previous high. But then, of course, again, it didn't change. It's the 1.40 area. All this support resistance up here, that is the long-term target in case we get longs. Okay, so far? Okay, cable. We still have trouble here, right? We said we won't touch it until the price breaks support, or right now it's also looking a little bit like a wedge here, not a good one. But you see we have lower highs, but we don't have lower lows. That means that, just look at the weekly chart, okay? It retraced. We have the weekly bounces on resistance, a huge range. So still I'm in favor of shorts, because the price hit an area of heavy resistance for what is it, like 2-3 years. Okay, at least I would close to it. And now we have these red candles. As long as the price stays over here, not good. But if it breaks this and we get a setup below here again, than classic shorts. Of course, it's different if you are into bounce trading, then you already had entries with your red candles, right, according to the rules. But other than that, you need to see the break, a clean lower high, low low, ideally a 4 hourly or even a daily 1 to 3 below here. That would be good. If the price breaks 163, of course, then we go for longs. Otherwise, in between, I personally don't touch it. Now, if you want to trade the bounces here, look for longs and everything, then it's a different story. But I don't touch it. If the price doesn't break resistance, okay, I don't touch this pair. Okay, USD CHF looks pretty promising, at least if I draw the lines like this. We have resistance, we have a 1 2 3, another weekly 1 2 3 short, and of course if the dollar is going the euro US dollar is going up, then this will probably go down, and the scenario we already wanted to see here might happen. So we need this thing, we need a bounce here, a break of this line, and then on the daily chart also look, we have a 200 EMA touch. We need the bounce there, and if the price can move lower, would be great if we can get a setup below here to go short. If it breaks up, of course, then you forget all the longs. We have the shorts, we have to focus on longs then. Right now you see on most pairs the price is in an area of support or resistance, and it's for us now time just not to trade but to wait, see what happens. It's not that great. The last week the charts were not that great, right? Now GBP Australian dollar. Look at this. A huge 1 2 3 support, resistance, the price stuck there again. It bounced, but right now, if you check the daily chart, you'll see it's still in this range on the daily chart, right? Many touches there. Even the one that didn't touch counts, more or less. Support, resistance there, support here. The short didn't work out because remember the weekly had this big 1 2 3 setup, but of course it created a higher low, and then the whole scenario changed from short to long. Okay, and because of that we need the price now. We cannot just jump in, it's too late. We need the price to settle down, come back to support, and then do this. Yeah, so we need a retracement, a bounce here, and if we get the green candle, we can start looking to trade using the 4 hourly and 1 hourly charts for setups, and then target the highs again in extension, of course, later on. If the price really wants to break that, it could go up to here, hopefully to here, or later on up to here, 1.81. That's about 700 pips. But let's see. New Zealand dollar, US dollar, it's still ranging. Lower high, but no lower point on the chart. You see these are all the touches. It's the middle of this big range coming from the weekly chart. So no, I just don't like it at all. Only bounces, green candles, and day trades to target this, yes. But even if the price breaks here down here, we need a clean break of 0.81, okay, and then we can go for the shorts. So again, most pairs is just, it's all in the waiting mode. The only trade I have running, and I also took it on our practice account here with a few people, was the Aussie US dollar. And that is a 1 hourly entry because we have that weekly short 1 2 3, right? It's a big weekly short 1 2 3. We had the longs, we had the bounces. The longs were over. Now broke the 2 to 3 line on the weekly, pointing down. That could mean that price might move down 400-500 pips. Would be great because the weekly chart does agree. You took it with NFP, Kathy. Okay, well done. Daily. Look at the daily. We had a lower high. We had a break. The price broke also the 36. And I didn't trade NFP. I was not there. But I mean, if you did it, well done. Other than that, there was only a 1 hourly aggressive entry down here because the price did not retrace back to the 36. And as you can see, that's a very good example. When you see the price ranging and then touching the 12 EMA, but it's really not going higher. You see there's no it's trying to retrace, but it cannot, and suddenly you see a break of the line. It usually still makes pips, even for the first, at least for the first and second lot, if the pair is volatile. And another reason was just the biggest reason was just the confirmation on the weekly chart. Okay, and because I didn't get a chance to enter aggressive early up here, I did it a conservative and early up here. I did it aggressive down here. So Kathy, your entry price is probably, I don't know, a little bit earlier than me, right? Or something like that. I'm not sure. I didn't watch the NFP on Friday at all. So right now, because it's a very tiny stop, okay, and a small risk, there was only a stop of what, 20 something pips. Kathy says 93.86, 93.86, 93.86. Where is that? A little bit blind. 80s. Okay, so yeah, it's a little bit earlier than me. So well done. I took it here. Stop over the 5 minute. Okay, great. Over 0.3, and of course, you see it's only because it's a very tiny account, right? Out of 0.3 micro lots, I took only one out, and right now it's 50, so it's more than 2 times the stop. It is time to take out. The second part of it, general rules just to practice patience. Now I'm, let's say, a little bit older in terms of trading, or of the system at least, so I will not take out the second lot. I just I have earned the right to stay in for longer with the second lot, okay, because even if it goes against me, the money I make on accounts, even on the tiny one, is made from profits. It's not, I'm not trying to grow the account from my investment and you know, start making profits from the markets. I already made profits from the market, so whatever I trade is always profits from the markets, and that means I just leave sometimes positions in longer if it looks good. So I won't take out the second lot 2 times the stop according to the rules, but I leave it. It still looks good, and as long as the 36 EMA holds, I will stay in with the second, trying to go for maybe 100 pips and then take out the second lot. That is also, you will see in future, a nice way to grow an account quickly. And if it doesn't work, you just have to manage your trade, and that's it. No problem. No harm done anyway. Okay, so it's a good example. Now the target would be, I mean, we have some support down here, right? We cannot ignore that. Resistance, previous resistance in this area, previous support. So if the price moves down another 40 pips, I watch closely a 92.80 area, and if I see it's bouncing there, I probably take the second lot out here. But if it's breaking, maybe I'll leave it running. I will see what happens tomorrow there with this trade. Okay, that's about it. Now for new shorts, you really need a new 1, 2, 3. So you need the price to move lower, ideally much lower because we have the shorts. Then a retracement like this. Okay, this is the retracement here is difficult to spot. And if that happens and you get a 2 to 3 line break, you can then target the lows down here. Okay, So you need a new setup, at least ideally on the daily chart. You can do it on the 4 hourly, but you know the price already moved over 230 pips, so it would be probably best to get a good big 4 hourly or at least a small daily 1 2 3. Okay. Everybody okay with this? Hi, Paul. So we all agree? Have this on your watch list, please, right? Just the audio check, because I see some names that are... Can you all hear me? Just give me a quick yes, everybody. Okay, perfect. There we go. Next pair, the Euro Yen. Yes, I had a aggressive short, but now it had to be managed, and it's retracing. But it was a powerful, very profitable trade. Now you see the price has to stop there if we want to focus on new shorts. If it's breaking, then it will be again over support, and it means the price has we only can look for longs there. Okay, if the price breaks this for good and we get a higher low or something here on the 4 hourly chart, you see it's trying to break. So if we get a higher high and a higher low here, we have to forget the shorts for now again. Okay, it's all very, most pairs are in areas of support, resistance, they're ranging a little bit. It's really not that fancy right now. Okay, now in case, of course, if we check a daily 4 hourly channel, what? I mean, yeah, that's true. Something like that. It's a channel and a wedge. It's actually both. It's a channel and a wedge. So yeah, we are talking about this pair for a long time, right? We are kind of ignoring it. Only aggressive trades, okay, but anything else, just because it always comes back into this channel and everything, we want to be careful and look for clean setups. Only if you're aggressive, then you can try it out. But you see we had a bounce on the 633, and again, how powerful the 633 is, you can see right here. Price touched it, it's ranging on it, first green candle. It's a classic bounce trade setup. It's a 70 pip stop. Price went up already 180. That means 2 lots out in case somebody took this as a bounce along. Okay. The short was also great, aggressive here, short on 5-minute chart, but now it's over. And we have to look and see what happens. So ideally, if that happens, longs higher, and it could also still be a bounce trade in this channel, right? False break, higher high, higher low, and if you then get a green candle, you have a 1 2 3, and you also have a bounce trade excuse or reason to trade the longs in the channel. So keep an eye on this. We might get something later on today or tomorrow, if we are lucky tomorrow, in the room. GBP JPY, we looked for that. This didn't happen. Nothing, no 1 2 3, no setup. So this scenario is out of the window as well. We have to draw the lines again. Now we have more information, we have more touches. The price needs to do this, and there we go. At least that would be great, or a breakdown and then setups below on GBP JPY. GBP CHF, again we had the bounce trade shorts over. Now the price again stopped here. We have the first red candle. It's again a bounce short setup to target support and resistance, but it's a little bit aggressive because we don't have a clean range here. We still have, if you change the angle a little bit here, we have also still support, right? Okay, yes, it's a very, we have most touches down here and a lot of touches there, but because there's also kind of a trend in this big range, it's difficult. Yeah, you can also only trade the bounce, the shorts, with a low risk of 0.23% on the account. Target this, and if it breaks, extension the lows, otherwise stay away. A 123 GBP CHF. Yeah, you mean on what time frame? You mean the 4 hourly probably. No, we have a 123, but that's you see, that's the trap. You have a bounce of major resistance, and the 4 hourly chart is giving you a big 1, 2, 3 setup. Okay, so you don't want to go long on the 4 hourly chart if the price sits on resistance. You can combine it with the 4 hourly chart here with a 5-minute entry, small stop. Maybe you can hit target 1 and 2, and if it breaks, you leave that and turn the day trade into a swing trade. But other than that, you won't touch it on the 4 hourly chart. It's just too close to resistance. Or if you still want to do it, you have to remember what happens here. So what is going on? You have major resistance, you risk less, and if it doesn't work out, at least you know why. Because it's all about understanding. If you don't know what's going on, then you have trouble trading and making profits. Okay, you need to understand what's going on. Use the 4 hourly chart. Look at this. Is John here? Hey John, you are long here, right? You're still long. You had the hedged, you had the longs and you had the short. You got rid of the short and now you have the long. So I remember, because we covered it last week. I think I also uploaded the session in the members area. So from down here somewhere, it should be what, close to 200 pips profit, correct? The long. Okay, now the targets should be at least here. Okay, round number 100 area, in extension the highs from July 2013, and that could be at least another 170 pips. If you look at the weekly chart, you see, look at that, the highs, it's almost 300-400 pips. Why not seeing it going up to here? Then you can make probably 1,000 pips with that. Try to keep it as long as possible. You know what? If it doesn't look good anymore, what you now do, you just hedge it up again. Okay? Price is going up and up and up and up. If you see it's retracing quickly, or it's going up without a retracement, and you think that it will retrace very, very soon, you can hedge it up with your shorts. Milk the market out on the retracement, and if it goes up again, you get rid of the shorts and keep the long, which is the major swing trade. This way you make pips on both sides all the time. But wait for clean sign. Don't just go short just because you see a tiny little red candle. You want to see it, looking good and like a big retracement or price hitting resistance and then a red candle. Yeah, you know how to do it. I mean, you're not that new. Okay, great. Gold, I also want to check gold a little bit. As I said, just a reminder. Look at this. It's a little bit, we have resistance, we have support, we don't have lower lows, we don't have higher highs. I don't like this at all right now. If gold does not really create lower points on the chart, like really gives us a clean setup below here, ideally lower, ideally that, but I mean at least on the daily chart, a clean setup below here. 1 second, there we go. Then, oops, I wouldn't touch it, right? Look at this. And of course you have to draw the lines again on the daily chart. You have the cha-chi-chi. We have a wedge, right? So only bounce trades in the wedge, like a green candle, then aggressive longs to go for here. Or clean breaks and longs or shorts below there. So we are all in a waiting mode here. Silver, it's a little bit, look at that, this weekly chart resistance, support from here. It looks alike, right? And then you have, of course, draw the lines again. On the daily chart, they change on MT4. And then you have your wedge, same scenario here. We want to see the price moving out of here or below there. Then we still have the New Zealand dollar yen, which doesn't look much like anything. Look at this. It came out there. We had the bounce, longs and in play, but we have the range on the daily chart and the 4-hourly still. Look at that. So yes, the longs are still better than the shorts, right? Because price is still trying to create higher points, but also kind of a wedge. So we don't touch this at all. I wouldn't even put it on the watch list right now. Just leave it for a couple of weeks, see what happens. Okay. Do we have any other pairs you have on your watch list or something you want to discuss? Because as I said before, not many people were logged in. It was raining all night long. Never seen something like this in this area, and my basement is flooded, and I have to go, I don't know, go fishing in there or something. I have to get the water out later on. Yeah, so I want to be quick, but if you have any other pairs you want to discuss, let me know. Otherwise I'll leave and we catch up tomorrow a little bit more relaxed. I don't have the Dow on this. Sorry, I don't have the Dow on this chart. We check it tomorrow, okay? I think it's still at resistance. It did not break resistance yet, right? On the daily. Correct? Okay, perfect. Then have a great day. Watch out for the setups and pairs we talked about, and I'll catch up with you tomorrow, okay? Thank you very much. Bye.